If you are a retail trader, this video is going to be very important for you to watch. If you are not a retail trader, then you do not need to watch this video. However, I am going to rant a bit, so you might find it kind of interesting. But I wanted to talk about this number 236 again. A lot of you might not have seen the video I did before on the number 236, and I want to talk about right now why this is such an important number in trading. So the first thing I want you to do is go to Google and type in Goldman Sachs 10K report. And when you do that, you can see some PDF documents. The latest one is 2018. And when you click on that, you will get the PDF report of the 10K report for Goldman Sachs. That's a whole mouthful. Now, if you go to page 91 on the 2018 report, you will see this little chart over here. And these charts might not look like much. And I know looking at documents like this can be really, really boring. It's like watching paint dry. However, there is some information in here that is fundamentally vitally important that you know if you are a retail trader. And I'm going to break this down for you. I've actually got the 2017 version of this open here on a presentation I did when I spoke at the Blockchain World Summit. And people found this really interesting, and for good reason. It is very interesting. What does this chart over here show? Well, it says this is the daily distribution of net revenues for the positions that Goldman Sachs held. You can see it here on screen. That's what it says here. And I've got the 2017 version over here. And you will notice the trend of the 2018 and the 2017 are virtually identical. And if you go year before year before year before year before year, you will notice the same kind of trend with the curve being on this side of the chart. Now, let me explain this chart in a little bit more detail. If you look down here at the negatives, these are the groupings of the losses that Goldman Sachs would have made. So for example, 75 to 50, this means between 50 to 75 million dollars were lost in trading on that particular day. Meaning that 2 days out of the year, they lost money, up to $75 million. That happened again here, 2 days of the year. Here, 12 days, they lost up to 25 million. So, you know, there's a few days here where Goldman Sachs made some losses. And if we look over here, we've got the same thing. We've got the same sort of skew on the curve. But now let's look at the number of trading days where Goldman Sachs made money. And, you know, this is staggering. This is staggering in my opinion. 41 days out of the trading year, Goldman Sachs made over $100 million. Now, there's nothing wrong with that. They're a business. Like, there's nothing wrong with this. However, when you look at that and you count the number of trading days they made profit, you get this number, 236. And if you divide that as a percentage of the total trading days, that means 94% of the time they're making money. So I want to just, you know, jump over here to our friend, the whiteboard. And actually, we're going to turn it into a blackboard because our marketing guy, Chris, who I think you've seen now, he prefers the blackboard. So Chris, this is for you. But 94% of the time, Goldman Sachs are making money. So if 94% of the time, Goldman Sachs are profitable, what does that mean? Well, that must mean, surely, that 94% of the time, someone else is losing money. And who do you think that is? So in my humble opinion, and this is based on watching a lot of video content on YouTube, this is really down to retail traders losing money. It's retail traders. It's the consumer. Guys, think back to 2008 and the credit crisis. Who paid for that? Who is ultimately going to pay for all the debt that we're racking up in all these countries, which, you know, banks and investment banks and economists actually don't think is a problem because they think we're just going to be able to rack up debt forever and it's meaningless. But when we have to pay the piper, it's the consumer, it's the retail trader. It's always the consumer. So 94% of the time, Goldman Sachs are making money, meaning that 94% of the time retail traders are losing money. Let's talk about why. Let's talk about why, and let's talk about the structure of things. And by the way, this video is going to be a bit longer than the ones I normally do. And Craig, I know one of our viewers here on YouTube, I spoke with him yesterday. He actually inspired this video. I did ask for the videos to be a bit longer. Craig, this one is just coincidentally going to be longer. So, but the reason it's going to be a bit longer is I want to take everything I've learned over years and distill it down into like 10 to 20 minutes. So years of learning, hours of video content, etc. I want to give you guys just the bootstrap takeaways. And I'm not expecting a lot of people to like what I'm about to say. In fact, I am definitely expecting a lot of dislikes for this video, and I'm absolutely fine with that. But I need to just tell the truth the way I see it. So when you look at the stock market, you've got your exchange over here. Now, if you're in the stock market, we'll get to crypto in a second, but if you're the retail trader over here and you want to trade stocks, you can't buy those stocks directly from the exchange. You can't. How do you buy stocks? Well, you have to go through a middleman, and that middleman is a broker. So brokers are essentially who you go through to buy and sell stocks. So there's a middleman over here, meaning that where there's a middleman, money's going to get lost between you and the broker, number one, straight away. That's already going to happen. And for some brokers are absolute sharks. There are great brokers like Interactive Brokers who you need, I think it's $10,000 I needed when I set up an account with them. You just need that sitting there, 10K. And by the way, we'll talk about crypto in a moment because it's even more. But for the brokers here, and actually not brokers, but I'll get to that with crypto. So you need about 10K for a good broker. But for all the other retail brokers over here, you don't need that kind of money, and it's very easy to buy stocks and to trade. It's very, very easy to do it. But here's the problem. Brokers know, and exchanges know, they know this. They know. And so what do they want to happen here? Do you think that they want you to make money? And where does a lot of the education in trading come from? Let me give you a hint with some yellow arrows over here. A lot of the education comes from brokers or gurus, because gurus can make money selling courses, but it really comes from here. And so brokers offer a lot of trading strategies. They offer a lot of technical indicators, etc. They invest tens of thousands, if not hundreds of thousands of dollars in providing, really cool trading software where you can do really good technical analysis with Fibonacci's and whatever. Why do you think they're doing that? Do you think it's because that's what's going to make you money 5 years running? Like, literally, let's just think about this. I know I sound very cynical and skeptical, but this is honestly what I genuinely believe is the truth. These guys here, they have the access to the exchange. But guess what? Some of the brokers, not all of them, but some of them, they won't even place the trade on the other side. So when you place a buy order, if they know that 94% of the time you're losing money, they've got algorithms that can figure out your trading pattern. But if you're losing money, they're not always going to place the other side of the trade, because they know on average, not only are they going to take the commission for the trade, they're also going to take the damn trade, because they just know. And so this is what you're dealing with over here. Number one, this is just point number one. Let's take it over to crypto. How does it look in crypto? Well, the cool thing about crypto is you have your exchange, and directly with your exchange, you have your retail trader, and your retail trader can go directly to an exchange and buy and sell crypto. Now, the problem is over here, because now you have exchanges playing all sorts of dodgy tactics with retail traders over here. And by the way, you would have seen last night, we published the first video introducing Dimitri and Nick. You definitely need to be watching that series, because there's going to be about 13 videos. They're coming out every other day. There's going to be about 13 videos, and these guys are building an exchange. So you get to see what the world looks like from their perspective. And it's very, very rare. I don't think you'll find that anywhere else. So you definitely need to watch that. But this is the reality here in crypto. You get to trade directly with the exchange. But here's the problem generally in trading, because when we talk about, well, one of the major problems in trading, whether you're a retail trader, is this, it's cost. So the cost of trading on these exchanges is extremely high. Spreads are very, very wide, etc. And some of these exchanges, when you listen to the interview, you'll hear about what's actually going on. Some of these exchanges are giving you the worst cost possible, the worst price, and they're making money no matter what direction, the markets move. They really don't care. But they're making money because they're giving you terrible, terrible prices. And when you're a retail trader, you're not always thinking about the price. You're thinking, oh, this is the easiest way to buy this thing, and I need to buy it because I think it's going to go up. And exchanges, brokers, etc., they know this. Now, don't get me wrong. Brokers can be very, very useful. Having a broker in crypto, that is linked to reputable exchanges or a reputable exchange can actually be very handy. And I'm going to tell you why now. Because like I mentioned earlier with interactive brokers, you know, with them, you need about, what is it? You needed about $10,000 to have an account. A lot of retail traders don't have that. In crypto, this is the number you need to have a corporate trading account where you get the best prices. This is the number you need here, $100,000. Don't ask me how I know this right now. You'll find out soon. But you need $100,000 to have a corporate account to get the best prices. Do you have $100,000 lying around? Some of you might. Some of you watching this might. I know some of you have a lot of size. But I don't have $100,000. So I can't get the best prices. So this is where a broker can become very, very useful. If you have a broker that's willing to have access to that corporate account over there, you can have a broker set that up and provide better prices here to the retail trader than the exchange does directly. And when I think about this, you know, what I really think we're going to see happening over here is we're going to see some actually good brokers coming into the market. That's actually what I think we're going to see happening. But what that's then going to do, because other people are going to cotton on to that, that's going to then spawn this idea that we need more brokers, etc. And what I'm predicting is going to happen, I could be wrong, we're going to have a like-for-like comparison. Trading crypto is going to look like trading stocks. Eventually, it's not going to look any different. So this is just my prediction. Of course, I could be totally wrong, but I just want to, you know, come out there and say it. That's what I think is going to happen. So the other advantage that big traders have is size. And I learned this from a channel called No BS. I don't know if it was a channel or a Google page or whatever, No BS Trading. And, you know, it's one of the boring channels. It's one of the ones that are slow and you have to pay attention for 2 hours, etc. And I went through all those videos and I learned a ton. I learned a ton. So follow No BS Trading. And by the way, there is a 2-hour video that talks about a lot of what we're going through here. And if you do want me to reference it, just ask in the comments and I'll put it in the comments. I'm not sure if you guys want to watch a video for 2 hours or not. I do, because I like to do the things most people aren't prepared to do. So if you want me to do that, I'll definitely do that. But you'll learn that size matters. So the question is, you've got so much going against you as a retail trader. You know, you've got the exchanges wanting to take your money. You've got middlemen wanting to take your money. You've got high costs, high spreads, etc. And by the way, again, with the CRIX exchange that we're promoting here on Crypto Wizards, you need to follow them because they're looking to help traders with a lot of this as well. But you've got all these barriers to entry. So how do you make money as a retail trader? Well, the first thing that we need to realize is that, just going back to the earlier point, most of the education out there is absolute, I'm having to catch up my drawing to my speaking, absolute crap. So most of what's being taught out there is as a result of gurus who just want to make money and who actually don't make money year in and year out and haven't traded in investment banks, etc., year in and year out, and brokers. So I would even go as far as to say it's 94%. 94% of the information out there is coming from people who actually really just don't care whether you make money or lose money. So how do you then know what education is the right education to make money? Well, I'm going to tell you. The way you know that you're getting the right education is through a mentor. Now, it's the same is true in business. If you want to learn business, you find a damn mentor. Find someone who knows how to do what you want to do. Don't spend $17,000+ like I did on different trainings, etc. Go and find a mentor. When I started, hiring mentors, and you pay for a mentor, you start getting a mentor, your life starts changing, and I'm not kidding. You find a mentor. Now, to find a mentor in trading is extraordinarily difficult. Very, very difficult to do, because who's going to want to spend their time training you how to do what they do, because now you're a competitor. And trading isn't like business in that sense. You're literally competing. So you find a mentor. That's how you get educated. Now, what else can you do to make money? And really, this is something I really believe in. It doesn't come from any trading course or mentor that I've ever learned from. but it's KISS. So keep it simple, stupid. Keep it simple. Like, trading doesn't need to be complicated. Do you think that these guys here, Goldman Sachs, do you think that they're making this money because they have the best technical analysis on charting? Like, it's laughable, right? I know some of you are hating this video right now, and that's fine. But I know some of you guys out there are getting this. And if you're getting this, I'm really, really happy, because that's the whole point of this video. I really want to help people wake up. Like, do you think these guys are looking at Fibonacci? Seriously, they're making, let's just put this into perspective. They're making like 75 days out of the year. They made up to $75 million per day where they're looking at Fibonacci patterns. It's laughable, right? When you actually think about it, it's actually funny. No, they're doing no-brainer trading. They're doing HFT, etc. They're using all sorts of legal tricks, which, by the way, in my opinion, is actually criminal. What these guys get away with is criminal, but it's legal, so fine. But they're using all sorts of tricks where the money they take, it's just a no-brainer. Why do you think on Crypto Wizards here, I just, I love drawing, so I'm just going to keep drawing, even though my drawings absolutely suck. Why do you think that on Crypto Wizards we talk about arbitrage? Because, it's really straightforward. With arbitrage, you do what works. Like, it's mathematical. There's no speculation. It's mathematical. And by the way, I'm not against speculation if your strategy has a high risk to high probability to risk, or a high Sharpe ratio, let's call it. If your strategy has a high Sharpe ratio, then yeah, no, directional trading is absolutely fine. If you're taking, some losses, but your wins are bigger than your losses, that's also fine. But the point is, do what works. And how do you know what works? Well, you get a mentor. You get a mentor, and that's how you do it. So, you know what? For the retail traders, I really hope you got value from this. I'm going to ask you for a favor here, actually. And it's not a favor for me. I don't really benefit for it other than I sleep better at night. I never ask people to really share these videos. And I'm probably never going to ask people to really share my videos because I quite like our small community over here. But this particular video, I'm going to make an exception for. If there is someone who who you're friends with, or you're in a group or whatever, where you see people spewing out crap that ultimately comes from this source, don't be afraid to to stick your head out and say, guys, this is actually bullshit. And here's why I think it's bullshit. And you can share this video. Let them hate me. Like, I honestly have no problem with people hating me. This is my opinion. And I want people to wake up to this. And the fact that in crypto, people have been losing money now. Like, this is what's been going on in crypto, right? People have been buying these bots, etc. And they're realizing it's not working. People in crypto are learning. I don't think people realize how much they're learning about trading in crypto. When I met Data Nick Merton, really cool guy. And I was chatting with him and I said, I really think that traders are learning a hell of a lot about trading in crypto, much better than they were in the stock market. And he was like, yeah, no, you're absolutely right. People have learned a lot about trading because of crypto. So I know people are starting to wake up and they're starting to figure out what actually works. And I think this level of education is hugely important because, like we've just said, this is going to happen. Crypto is going to become just like the stock market, but we want to make sure that if we're in here, we're in this together and we're making money together. Like, we're doing what works. You know what? If I could think of another tagline for Crypto Wizards, it would be do what works. Here's something else as well. Crypto Wizards, the whole name, people might be wondering, where did Crypto Wizards even come from? I'm not actually a Harry Potter fan. It's a cool film. It has nothing to do with that. The only book, and this is actually useful again. So if you've made it to this video so far, congratulations, because I'm just going to keep giving as much value as I can. The only book you should read, or there's only a few books, I should say, that you should read when it comes to trading, is Market Wizards. And look at both books. There's actually 2 editions of it. And so Market Wizards, this is what traders recommend you read, because these are interviews with real traders asking them what they were doing to become so successful. And even though they don't give you the exact strategy, they go pretty detailed, you get an idea of what actually works. And by the way, trading is a lot like starting a business. Any business works if you make it work. You got to figure out how to make it work. But this is the book worth reading. And so, when I started Crypto Wizards, I always wanted to bring truth to the market. And I started this with John. I soundboarded it with my best friend, John, who also supports the channel here, by the way. He's my business partner as well. We decided to call it Crypto Wizards because we wanted the same ethos. We wanted to only talk about what actually works, the boring stuff. These are the videos that people aren't really searching for. Our community is so small and I want to keep it that way. This is what actually works. So this is where Crypto Wizards actually came from. So if you're going to read up about stuff, read Market Wizards. This is the knowledge that we need to have, because when we get into this paradigm, which we're going to be getting into this paradigm very soon in crypto, we want to be ahead. Let me put it this way. You want to be the trader who becomes the mentor because you were in so early on and you learned the hard way and you lost money, but you figured it out. You want to be the guy who can mentor someone one day. And you have a massive opportunity to do that in crypto. And in my opinion, too, penny stocks. I actually do believe that what Stephen Ducks teaches on penny stocks is totally legit. I even went through his sales funnel to understand how much he charges, etc. It was really interesting. But this is where the action is at. So I'm going to end this video over here. I know this was a very long rant, but it's very, very important. And it's very important that if you do see people spewing out misinformation in crypto, and they're good people, they're not bad people, we're good people. Everyone's good at heart. Everyone's trying to do the right thing. Help them. Like, this is the only video I'm going to ask people to share. Help them understand what is going on. And guys, here's the proof. Like, I don't know what else to say.